attracted you to technical analysis?
See, I came to the market somewhere around 1977 as an investor. And like all investors, I was using fundamental analysis because that is the only thing which was known. I persisted with it till about 1981 and was not very happy with the kind of results that I was getting. And that pushed me to look for some sort of alternatives. And in that search for alternative forms of investment, I came across technical analysis. And I somehow felt that gave me a little more of the accuracy that I was looking for in the market. And since that has happened, I have chosen to stay with it for well over past 30-35 years. So I think it's really the more accurate working of the technical area that attracted me in the first place, and I have actually chosen to remain with it ever since.
What is your concept of technical analysis?
More than anything else, I think technical analysis has you rooted to reality. That is its key strength. It tells you not only what has happened, that anything will tell you if you look at history, but it also is a very good way of finding out what is happening. And that, I think, is the most critical thing in the markets. You must know what is happening, because all your forecast about the future is based upon what has happened, but also mixing it up well with what is happening. And I think technical is the only thing which tells you what is happening currently and in what manner is it happening.
Which are your favorite indicators?
Oh, I look at them all. I don't have any favorites. I think over the years I have looked at probably every indicator that technical analysis has to offer. I think all of them have certain value under certain conditions. And it's really up to the analyst to identify the kind of conditions that exist in the market so that he can choose the appropriate indicator which should be relevant to that particular situation. It's almost like a carpenter's toolbox, that for the relevant action he chooses the relevant tool, and that tool works with most amount of efficiency for that particular situation. I think technical analysis is very similar. It has a wide range of tools, and it's really the analyst's familiarity and comfort with the tools which helps him to pick the correct one, which will fit the situation and give the best results. So I don't really have any favorites. Yes, you do lean towards one or two every now and then, but then as a good analyst you must look at all the tools in a similar fashion.
What are your unique strengths?
Unique strengths is something which has been rendered over the years by the market. I don't think I came with them to the market as such. The major strength that has developed, and I would actually credit technical analysis with most of that, is I have learned over time to keep history as history. Meaning I don't allow whatever has happened in the near past or in the distant past to really affect my judgment of what is happening today and what that means for tomorrow. Most of the problems while converting your analysis into action really comes about when you kind of remain a prisoner of whatever has been there in your experience in the past. I think that is one of the most critical learnings that I have had, and it's ability now which I continue to hone and which helps me the most, because you do need to leave the market behind and your recent experiences behind and look at new opportunities, new setups as something completely new with completely its own set of probabilities. If you mix it up with something from the past, then it really gets covered. So I think that is what I would say is something.
What have been the highlights of your earlier forecast?
I would think, forecasting the end of the 2008 bull market was, I would rate it as one of my best forecasts. And That is the one which had the most devastating effect in recent memory, and fortunately I was able to exit from the market, got all my clients also out of the market by somewhere around December of 2007. And even though for a very brief moment the market did push ahead till about 8th of Jan 2008, we were happy to have been out slightly early, but then we managed to stay out of the entire debacle of 2008, and that I think has been the most significant of all the calls. We did manage to get the bottom of 2009, but we could not trade it as successfully because like everybody else, we were also overtaken by the gloom and doom scenario which were prevalent back then. So even though we did manage to tie down the bottom of 2009 right into about March, April, that is prior to that election big boom, we were not really able to take too much advantage of it. But then the fact remained that we were not short near the bottom like so many other people were. We may not have gone long aggressively at the bottom, but then that is something we managed to do post that 2009 election. So ever since that it has been pretty good. 2011 low was also something which we sort of almost got it down right to the week in which the bottom happened. So I think we did manage to successfully ride out the initial very strong move of 2012, which made all the difference for the returns of 2012. So I think major turning points we have been able to catch, and that I think has been one of our biggest success of our company.
Are you using technical analysis for currency and commodity markets also like stocks?
Very much so. I think that is one of the biggest advantages in technical analysis is that as a framework it becomes applicable to all the financial markets. So long as you have a free traded market, you can apply the same set of principles that you are currently applying in equities. And with very minimal change, you can apply to commodities, you can apply to currencies. In fact, the models that we have actually prepared at Growth Avenues is the same model which we apply across into our trading and advisory services for commodities as well as for currencies. And I'm happy to say that they are actually working with even much higher level of efficacy in the commodities and currencies markets than in the equity markets as well. So I would rate, if you look at it from a global point of view, the maximum application of technical analysis happens in the currency markets, followed by commodities and third by equities. It's only in India that we have been having this equity culture for a very long time. So it began with the equities and now it's finding its way into commodities and currencies.
In your opinion, what is better, fundamental or technical analysis?
I don't think that's a fair question because each has its own strength, each has its own role. And I would go as far as to say that fundamentals are the driving engine of the market. You will not see anything on the charts if the fundamentals were not there in place. And it's really people who are taking views on the fundamental variables as they do show up. And it is their action which is caught on the chart, which we then convert into a form of analysis which we have named as technical analysis. So at the root of it all lies fundamentals. But fundamentals change slowly over a longer period of time, whereas we live through day to day and hour to hour and trade week to week. So we do need to have a kind of analysis which addresses the changes in the market mood. See, if you look at it, fundamentals actually capture the kind of static picture of the status of a company as on a certain date, 31st March or something. In a very similar fashion, if you look at technicals, that is also a static capture of the balance between the supply and demand equation as of a certain point of time. Now the difference is that supply-demand equation keeps on changing from minute to minute, so therefore the charts are able to capture this particular balance or imbalance at whatever points of time you want and enable you to become a trader or an investor over a very vast number of time frames. That is not possible using fundamentals. So fundamentals is necessarily long-term because of the way it is structured. The advantage with technicals is that you use the basis of fundamentals and then use it to convert it into action into the time frame which you want. So So really there isn't anything to say one is better than the other. I think somebody who can do a good job of both rather than be a purist of one will be better served in the market.
How technical analysis is useful for day trader, position trader and also an investor?
I think the biggest advantage with technical analysis is that it could be used by any kind of player, starting from a very aggressive day trader going right into a long-term investor. You have cycles of various nature playing out at all points of time in the market. These cycles can be a few minutes to few hours, so that is of advantage and focus to a day trader. Whereas cycles also play out through multi-years, and that if you are able to read that and harness it, it is of advantage to a long-term investor as well. So therefore technical analysis is very, very flexible, and if you come down in the time frame, let's say rainbow, then I don't think you can ever do it with anything other than technical analysis, because the shorter time frame changes are addressed only through changes in the technical variables. Fundamental variables do not change at that pace, and neither is the change available as a data point for us to analyze. So therefore, those who are day traders, swing traders, positional traders, where we are talking about from intraday going up to, let's say, multi-week trading, I think they have no recourse other than technical analysis to use as their main tool. They may rely upon news, events, fundamental, let's say, developments to fashion or to control their approaches using technical analysis. But then in the shorter time frame, it is only technicals which can help you. As you step into the longer term, I think a mix of technicals and fundamentals would be the way to go.
How effective is the technical analysis and what is the success ratio?
See, effectiveness of any analysis format is quite different from success ratio. Effectiveness, you are talking about the quality of the analytical form, and in its true forms, both technical and fundamental should be 100% effective, because they are laid down rules for what needs to be done and under what circumstances various things need to be done. Effectiveness comes into the hands of the analyst or the trader who converts the analysis into action. Now, therein really lies the crux of the issue. How well are you able to make this conversion? That will decide your effectiveness. And I think how well you are able to convert it really depends upon how well you know the subject, how well you know to analyze. And it's not just knowing various ratios, let us say, within fundamentals or a couple of tools within technical. Everything is a holistic picture, and it is really how you put that picture together and read what it means and be able to convert it into action that truly decides how effective it becomes. A good tool in the hands of a bad analyst or practitioner can have a very, very low levels of efficacy. But if you are a decent practitioner and you know your stuff well, I think it is easy to achieve very, very high levels of efficacy. I think somebody doing it well, who knows the subject well and who can translate it well into action, should have no difficulty in consistently having a hit rate in excess of about 70%.
How technical analysis is different from other trading systems?
See, technical analysis is the basis for creating trading systems. So it's not sort of different in the sense that you asked me the question. Trading systems are nothing but a set of rules that you put together, and these rules actually emanate from within technical analysis. So you need to know your basic technical analysis very well, and then you will create some rules out of it. Now these rules will also emerge from the various tools that you pick to create or to design a trading system. So a trading system finally is just a set of rules which you shall use to apply the tools that you have chosen from the vast area that you have within technical analysis. Now trading systems have to be designed specifically for a certain purpose. Are you going to day trade it? Are you going to be a breakout trader? Are you going to be a support resistance trader? Are you going to hedge? Are you going to do arbitrage? Your purpose is the key to designing of the trading system. Once the purpose is decided, the trading system will then indicate what rules you have to choose within technical analysis, and then putting it together, creating a set of rules by which the system is to be applied in real time. That is what will be a trading system and its application. So technical analysis lies at the root of trading systems.
What is the main advantage of technical analysis?
I think I mentioned it earlier in answer to your first question. It is that it tells you what is happening, and as the good books of spirituality also say, you have to be in the here and now for you to be most effective. And I think that is possible using technical analysis, because see, when you are using technicals, you have to, and you are largely kind of responding as a trader, as an investor. You're largely trying to respond to some sort of news which is going on around you. Now, as far as news is concerned, it's good or bad, really depending upon how it affects one. It's not good and bad by itself. Now, the key question to ask is the news good for the market or good for the stock? Good in the sense that there are positive follow-ups from it. And the second question that one has to ask is the news already being discounted by the market? Now, these are two things which can get answered only in the present. And for knowing what sort of reaction the market is giving you, you need to know good level of technical analysis. It's not the news which is important, but the reaction of the market which is important. And the reaction of the market can be studied only through technical analysis. So technical analysis therefore becomes the language of the market itself. And that is the essence of what we try to teach also in our training programs at Growth Avenues. Whenever I do the training programs, I explain technical analysis as being a language of the market, a language which we need to learn and to be able to understand, so that we can know at any point of time what the market is saying to us. Most of the time we are saying something to the market, and that is never going to help. It's always better to listen to what the market says. I think that is what really is the biggest advantage of technical analysis.
What is your message for investors and traders?
I think smaller the investor you are, the more is the necessity for you to know technical analysis. In fact, we do some free seminar where I hold this particular topic as the main topic, as to why is it that the small investor needs to look at technical analysis more than anybody else, because it is the only thing which will protect him from the risk of the market. He has very little knowledge about fundamental analysis, but then he has even lesser knowledge about technical analysis. So therefore the small investor and the small trader is actually batting with both hands tied to his back, and therefore anything that he tries is going to be a failure. So he must know something which will prevent him from making losses. So as a small investor or a small trader, if you do not know technical analysis, I think you will be defeated almost every time in the market. Once you become a very large scale investor, then you can hire and pay a fee to get you high levels of fundamental analysis, or even pay for some analysts to get you technical analysis. Then the ball game is completely different. So I think for all investors and traders, my sincere view is that they should make their best efforts to learn technical analysis well, because learning fundamental analysis for them and trying to apply it will be a very, very difficult job. Whereas learning technical analysis and applying it will be a lot simpler, a lot easier, lot more doable, and I think it will save them a lot of grief. Particularly it will save them from losing money. Once you stop losing money, then you can set about trying to make money in the market.
What is your forecast on today's stock market?
Well, we are all reeling from the bearish phase which has been going on. We did see some bit of rise in 2009, but I think over the last couple of years things have just been going from bad to worse. The Nifty levels are very beguiling, and if you see it in 2013, for example, you will think that the Nifty is hardly down by about 2%, but then this can be attributed to some 5 to 10 stocks only from the whole of the market, which have probably contributed let's say about 9, 10, 12 odd percent as gains compared to the rest of the Nifty, wherein the losses would be something like significantly higher than that. And if you look at the mid cap and small cap space, I think only in 2013 I would think mid caps have lost and small caps have lost about 30% of their value. This is not to talk about the losses they had in 2012 and 2011. So the market is really quite polarized right now. The large caps are trading at 5500 Nifty, whereas the small and mid caps are trading at closer to something like 4000 Nifty. So you have a very, very high level of polarization, and this seldom lasts as a situation, and I think therefore we must be winding down to a end of the long-term bear phase, which theoretically has been on from 2008 onwards. We have been briefly interrupted with a nice strong rally in 2009, but if you take it as a 5-year window, it had 1 year of rise and 3 to 4 years of a decline. So I think we are winding down to end of that. Ending phases are never happy ones because they actually inflict even more damage than the early phases have done. So I think markets may turn a little more ugly before they can turn better, but maybe by the end of 2013 we should be seeing, or we should be getting ready to see this long bearish phase away and look for better times ahead in 2014-15.
Any other important point you may like to share?
What I would say is that people need to rely upon themselves more, because the market is a very mercenary place and everybody here is doing some sort of business. So you cannot blame brokers, you cannot blame mutual funds, you should not be blaming your portfolio manager or your advisor. Everybody is running a business and they have certain access to grind within that. So it is the responsibility of every individual investor trader to know something, educate himself a little level. You can't keep relying on luck, because your output is a function of both luck and skill. So if luck cannot be relied upon all the time, it is your, I think, singular responsibility to raise your level of skill. And I think that is the message I would like to leave everybody with. Educate yourself to whatever level possible, so that you can be the decider of how you will play this market and not get led around by people with other motives and other intentions.
Thank you.
Thank you very much.